So, good evening, everyone. My name is Maurya Hanspal, and in today's session, we're going to talk about value investing. What exactly is value investing as proposed by the finance guru, Mr. Warren Buffett? What exactly do we do in value investing? You know, the guy, Warren Buffett, he was able to earn more than investing. And when people have started to understand finance, have started to understand stock markets, have started to understand the concepts of investment and valuation, people have started to realize that Warren Buffett did not get lucky. The strategy that he used was the strategy of value investing. So, in this session, we're going to learn what is value investing and some different concepts which originate from the theme of value investing. So, as the name suggests, value investing, you are investing into those stocks that have a certain value, that have strong fundamentals, that have a strong sustainable growth in future. The stocks which are expected to grow more in future, the stocks which have a profitability, the stocks which have positive free cash flows, the stocks or the companies that have had a future that everyone believes to invest in. Even if the company is not making profits, the company is into losses, or the company has negative cash flows. As we can see in this new age tech IPOs, still the company should have a future potential. There should be an expectation, or there should be a forecasting that the company would earn a profit in future. No matter if the company is into losses at this present time, the company is having a negative cash flows at present, but still the sustainability of the company should be there. So value investing is not only for the companies which are profitable or have the positive cash flows. Value investing can be done for two set of stocks or two set of companies. First, the company which has strong fundamentals, the company has the profitability, the positive free cash flows, and a sustainable growth ahead. And the second case, at present, the company is into losses, the company has negative cash flows, but one is definitely sure that the company would be earning huge profits in future. The company would transform the negative cash flows into the positive cash flows because the company is serving the society in a way which is filling up the gap in the society. The company can have a greater growth in future, a sustainable growth. So in terms of value investing, we try to find such kind of company. Okay. And as suggested by Warren Buffett and various other experts as well, all these companies might not be trading at a higher values, or all these companies might not be trading at the overvaluations. A lot of these companies are undervalued as well. Now, what a company is overvalued, what is undervalued, and what is fair valued, all this I have discussed in my previous YouTube live sessions on valuations. Okay. So, a lot of these companies which are fundamentally strong, which have a great future ahead, which have a sustainable growth ahead, the company that can survive and give huge returns to investors in future, that companies might be trading at an undervalued, matlab they might be trading at a value which is less than the fair value. It would be the best time to buy such companies in the market. Because if you are buying those undervalued companies which are trading at a very low value, it can be a low PE multiple, it can be a low EPS multiple, or a price to book value multiple, or a price to cash flow multiple. Endless multiples we have talked in the valuation classes. They might be trading at a lower value, they might be undervalued as compared to their peers within the same sector or the same industry. But these companies might have a monopoly, or these companies might be serving the society in the best way, or might have a sustainable future. So make note of one thing, value investing won't give you returns instantly. It is not like synonymous to trading or short term gains. Value investing is for the long term purposes, as the name suggests, investing and not trading. It is value investing, not value trading. Okay. So value investing won't give you returns now, or 1 year, 2 year, 3 years. It might give you return after 5 years or 10 years or 15 years. So, like for example, if you are finding a company, such a company at a value, the price of the share might be just 200 rupees, like very cheap company. But after 15 years from now or 20 years of now, the price might transform into 2000 rupees or 5000 rupees or 10,000 rupees. And obviously, you won't be buying a single share of that company because transformation of 200 rupees into 2000 rupees after 10 years is quite less. You would be buying 50 shares of that or 100 shares of that. In that case, the profit would be much more. And obviously, you are not trying to find out one such company, but trying to find out many companies. A lot of the companies which are trading below 500 rupees in the market, which are affordable for the new age investors in the market and have a sustainable future ahead, should be the companies which people should buy right now. A classic example of such companies, I don't know, like you might have heard such companies or not. Like one such company in the market is Neogen. That Neogen company is basically for the lithium batteries, and lithium batteries would be used for the theme of EVs, electric vehicles, and the theme of EV is quite profounding nowadays, right? So these companies are less known in the market. I'm not recommending these companies that you should buy these companies because I am saying you should do your own homework, analyze this company with other companies as well, and then buy such companies. Like one such company you have is the Acrysil. So that company is basically making the wash basins and tiles in your houses, and 90% of the market share they have with it, apart from the hindware as well. Okay, there is one such company called the Amrutanjal. So that is basically for the various kinds of things which people and women specifically are using for their day-to-day comforts. And these companies are having a monopoly. Again, we have the theme of solar panels. Again, for that company, we have the Borosil Renewables. So that company is the monopoly all over the world in making the solar glass for that solar panels. So all these companies have a huge potential in future while taking into consideration the theme at present. These companies have a good potential in future. I'm not saying these companies will have definitely have a good potential in future. I'm not recommending these companies. You have to analyze these companies. So that is value investing. A company that can perform very well in future is trading at a very low multiple or at a very low value at this present date, and you are buying that company, a large number of stock of a company or multiple companies, and buying multiple stocks, and these companies would give you huge return in future. And that is what like Warren Buffett did. At that time, people called him a fool because he was buying such companies which was being traded at a very low value. And people said him buying a company which is being traded at a very cheap value is not good enough. You should go for an established, strong company. And the past history has also indicated that the small caps and the mid cap companies have outperformed the large cap companies or the established companies. So he did not listen to anyone and started buying the small caps and mid cap companies, which were undervalued. And they outperformed the market and later became the large cap companies. So that was the strategy that he did. Also, if he picked the undervalued companies, it doesn't mean that you would be picking all the undervalued companies in the market. And I have even touched the same point in the previous sessions. There are some penny companies or penny stocks also being traded in the market. You'll buy those stocks, the market value of that company would rise, but those companies have no fundamentals. At times when come when the market share of the company would go down and the company would go into bankruptcy and company band. So value investing means only finding those undervalued companies which have a growth potential in future, who can sustain the demand in future, who fill in the gap of the non-existing opportunity. Okay. If people are demanding something in the market and that is not into consideration the different behavioral finances, the psychological aspects, experiences, and financial aspects of different people. For you, the undervalued company might be at 200 rupees. For me, the undervalued company might be at 500 rupees. So these assumptions differ and it might not stand true like in the present scenario. So these are just the models and not the recommendations. And I'm not saying you to follow these models while picking up your stock. Okay. These models might work or might not work. And these things we have discussed in technical analysis, and the YouTube live session is available on College Dekho YT. Okay. So first model, we had the Benjamin Graham model. So he suggested a basic formula on the basis of his calculations. And now do not ask me that how this formula has come. This formula has come only on the basis of the behavioral finances or different investment psychologies by different person. So according to the investment psychology and behavioral finance aspect of Benjamin Graham, he gave V, which is the value of the company, is equal to EPS, the earning per share, into 8.5 plus D. अब 8.5 कैसे आया? He said that 8.5 is a price to earning ratio of a zero growth stock. मतलब एक ऐसे stock का price to earning ratio है which does not increase at all. If the market price of that stock is 200 rupees, it would go on like for just 200 rupees for lifetime. But in real life, it is not possible. Stock price हमेशा किसी कंपनी का फिक्स नहीं रह सकता, बढ़ेगा कम होगा. Even the stock prices changes in decimals also, 200.1, 200.001, 200.20, right? So in real world, this model, it might not work. But one assumption that we can take, why did he take the PE ratio of a zero growth stock? Maybe just in case he wanted the market equilibrium. He wanted a perfect market जहाँ पे सब कुछ stable है, ना ज़्यादा prices बढ़ रहे हैं और ना ज़्यादा price कम हो रहे हैं. So just for the sake of simplicity, to assume that the market is perfect, and what is a perfect market, we have again talked in technical analysis. Okay, perfect market, which means that the market cannot outperform the benchmark. ठीक है, अगर आपका खुद का है कोई पोर्टफोलियो, तो that will give you the same return as Nifty or Sensex. Okay, तो he gave this formula and इसने बोला कि इस formula के बाद जो भी V की value आएगी, that would be the value of that share. मतलब that would be the fair value of that share. Okay, अब if the share price is being traded at a value above the value which he got from the Benjamin Graham, it means that the share is overvalued. But if in the market the actual value of the share is being traded below the value which was founded by Benjamin Graham, it means that the share is undervalued. उसने अपनी खुद की वैल्यू तो निकाल ली, दैट वाज द फेयर वैल्यू. अगर उससे ज्यादा वो मार्केट में ट्रेड कर रहा है, इट इज ओवरवैल्यूड. अगर उससे कम मार्केट में ट्रेड कर रहा है, इट इज अंडरवैल्यूड. ओके, the next model he talked about was the net investing. So net investing में क्या हुआ? Like one formula was given, the net current assets value per share. Okay, net current assets value per share means the net current assets are in the numerator and the outstanding shares are in the denominator. And how to find the net current assets? The formula for net current assets according to this model was total current assets में से you are subtracting the sum of total liabilities and the preferred dividend. Total current assets का जो sum है total current assets में से you are subtracting the total liabilities, that is both the non-current and the current and the preference dividends. वो जब कर रहे हो subtract, you have the net current asset value in the numerator and denominator में you have the shares outstanding. So he said that the firm should focus on increasing the net current asset value per share. That is, the shares of the company must provide more value in terms of the assets. Because more the current assets that the company has higher liquidity, as we talked about in the liquidity ratios in the ratio analysis session. Higher the liquidity, it is best for the company. In terms of current assets, because current assets are used to pay off the current liabilities in the current ratio and the quick ratio, right? So he said, higher this ratio, it is best for the company. So net current asset value of the company should be higher. That is, the value that the company is creating on the basis of the share per the current assets of the company should be as high as possible, right? Third, we had the Peter Lynch model. अब पीटर लिंच मॉडल ने क्या बोला? He suggested a few of the things which should be common for all for analyzing a portfolio or creating a portfolio, or some things that you should keep in mind before buying the stock of that company. The first thing that he said only buy what you understand. A basic common sense. वही चीज मार्केट में खरीदो, the thing that you understand. Buy the shares of only those companies for which you are comfortable with, for which you understand the business model, for which you can talk about to anyone in the industry. You have the confidence over that company. Just do not buy any company randomly in the market. Analyze that company, understand that business model. See the profitability scope, see the cash flow scope, the sustainable growth rate. Is the company going for expansions or diversifications? Is the company filling a gap in the society for which something has not come? Whether the company has a first mover advantage or not. Try to analyze the company, try to analyze the stock, and then go ahead. The second one, we had the always do your homework. He said the same thing. The second point is related to the first point. Before analyzing the company, always do your homework. That is, before buying a company, you should analyze the company in detail. Company में क्या है, कैसी है, क्या profitability है. तो अभी like जो सारी बातें मैंने first point में बोली थी. Okay. Third, invest for long run. Again, value investing is for the long run only, I told. Those undervalued, fundamentally strong companies, they won't give you return right now or 1 year or 2 years from now. They will give you return after 5 years from now when the market it realizes their full potential. Or these kind of companies in the present scenario are more or less focusing on the emerging themes. Like for example, if a company is supporting the EV theme, it is good to invest in. If the company is going in for the solar power or renewable energy or hydrocarbon or hydro energy, these companies are good to go for. Like for example, the animal food or the pet industry has a good scope in future, right? Or the animal healthcare or the vet care business is has a good potential in future. But that these companies might realize their future after 10 years from now or 15 years from now. EV and renewable theme, they might realize their true worth in the near future, but these pet themes or the animal healthcare themes, they might realize it after 15 years or 20 years from now. Okay. Then ratio analysis. Do all kinds of ratio analysis. Do the liquidity ratio analysis, capital structure analysis, the valuation analysis, the activity ratio analysis, undertake various kind of valuation models. All these kinds of different ratios and valuation models have been extensively discussed in the previous YT live sessions. Okay, so watch them. The next one was Ray Dalio's all-weather portfolio. Now, again, there was a person, Ray Dalio. He is like one of the famous hedge fund managers. Okay. अब hedge fund का नाम ले दिया है, like a lot of people might not understand what's a hedge fund. So a hedge fund is something which is protecting you from the downfall in the market. अगर आगे जाके market में कुछ भी गलत हो जाता है, तो your portfolio would be kind of protected and your losses would be minimized. So all these kind of strategies play in a hedge fund in simple language. Okay. For all of you who know advanced terms of hedge funds, it is like very good for you. But all those who do not know hedge funds, I explained you in a very simple line. Okay. तो ज़्यादा भी like सोचने की need नहीं है. So like Ray Dalio was a person, he said कि I am creating a portfolio, that is like this person said, I am creating a portfolio which would go best in all kinds of weather. By all kinds of weather, he meant like if the market is going up, like if the market is performing well, the portfolio, it would do well. If the country or the economy is not doing well, the company is going into some recession or the company is going through some natural calamity and stocks are going down, still this portfolio, it would do well. That is, the portfolio would perform well in all the business cycles, be it an upward business cycle or a downward business cycle. The value of the portfolio, it would remain stable. Again, it was on the basis of his behavioral finances or his psychology. In real life, it might not hold true. Okay. He said कि stocks में 30% invest करो. He said कि commodities में 7.5% invest करो. Gold में तुम 7.5 करो. In bonds invest 15%. In long-term bonds invest 40%. Interim bonds मतलब intermediate bonds. These bonds are neither the short-term bonds or long-term bonds. He said उसमें तुम 15% करो invest and in long-term bonds invest 40%. Again, this ratio might differ from anyone. If I am investing in stock market, since I am a young investor in my 20s, okay, so instead of taking 30% of stocks, I might take more than 75% of stocks and create an aggressive portfolio because I have an appetite of taking risk. Whereas a person who is above 60 years of age or like 55 years of age, he might not invest in stocks because the stock market is risky and the hard-earned wealth or money that he has accumulated from the past earnings or jobs, he might not waste in stocks. अगर market नीचे गिर गई, तो it is all loss. Then he might invest more than 75% in gold or bonds to have a stable income, or maybe in FDs as well. Okay, but a younger person, maybe in 20s or 18, 19 years of age, he might invest in equity portfolio because even if his money is lost, he's healthy enough to work and earn that money back. So this ratio might differ on the basis of risk appetite. एंड दिस रेशियो कांट भी जस्ट, तुम थोप नहीं सकते किसी पे कि आप 30% स्टॉक्स में ही करोगे, आप 7.5% कमोडिटीज में करोगे, गोल्ड में इतना करोगे, बॉन्ड्स में इतना करोगे, या फिर लॉन्ग टर्म बॉन्ड्स में इतना करोगे, ठीक है. सो दीज वैल्यूज माइट डिफर, बट अकॉर्डिंग टू रे डालियो's ऑल वेदर पोर्टफोलियो, these were the values. Okay. The next model, the golden butterfly. This golden butterfly model said कि 20% स्टॉक्स में इन्वेस्ट करो, 20% स्मॉल कैप स्टॉक्स में इन्वेस्ट करो जिनकी मार्केट कैपिटलाइजेशन इज लेस देन 5,000 करोड़. 5,000 करोड़ से कम की जिनकी मार्केट कैपिटलाइजेशन होती है, दीज आर स्मॉल कैप स्टॉक्स. 5,000 से लेकर 20,000 की जिनकी मार्केट कैपिटलाइजेशन होती है, दोज आर मिड कैप स्टॉक्स, एंड मोर देन 20,000 इज अ लार्ज कैप स्टॉक्स. ठीक है, तो याद करने के लिए 5,000 टू 20,000 की लिमिट को याद रखो. 5,000 से कम की मार्केट कैपिटलाइजेशन है तो इट्स अ स्मॉल कैप. 20,000 से प्लस की मार्केट कैपिटलाइजेशन है, इट्स अ लार्ज कैप स्टॉक, एंड बीच का इट्स अ मिड कैप फ्रॉम 5,000 टू 20,000. ओके. 20% ने बोला कि लॉन्ग टर्म बॉन्ड्स में करो. लॉन्ग टर्म बॉन्ड्स अगेन कैन बी रिस्की because there is always an inverse relationship between price and interest rate in case of bonds. Also, there is always an inverse relationship between the price and the modified duration of a bond. Now, what is a modified duration of a bond? So, modified duration of a bond is basically the time duration for which you are investing into that bond. And that is different from the maturity of the bond. Okay, so that is completely a bond session. तो like मतलब ये session is like not upon bonds, but एक basic terminology I told you कि there is an inverse relationship between the interest rate and bond price. बॉन्ड का प्राइस बढ़ेगा तो इंटरेस्ट रेट कम हो जाएंगे, इंटरेस्ट रेट बढ़ेगा तो बॉन्ड का प्राइस कम हो जाएगा. अगेन देयर इज एन इनवर्स रिलेशनशिप बिटवीन द प्राइस ऑफ द बॉन्ड एंड द मॉडिफाइड ड्यूरेशन ऑफ द बॉन्ड. जितना लंबा मतलब कि जितनी लंबी बॉन्ड की ड्यूरेशन होगी उतना प्राइस कम होने के चांसेस होते हैं बॉन्ड के. ओके, दैट इज व्हाई इन्वेस्टिंग इन अ लॉन्ग टर्म बॉन्ड इज क्वाइट रिस्की बिकॉज द इंटरेस्ट रेट्स कैन बी वेरिएबल, whereas investing in short term bonds can be less risky because short term में इंटरेस्ट रेट ज्यादा चेंज नहीं होते, इंटरेस्ट रेट लॉन्ग टर्म में ही ज्यादा चेंज होते हैं. even like recently in the central bank of USA, like the Federal Reserve, they started interest rates कम हो गए थे, तो फेडरल बैंक ने बोला है दे वुड बी इंक्रीजिंग द रेट ऑफ इंटरेस्ट इन 3 सेशंस. ठीक है, सो अगर आप रेट ऑफ इंटरेस्ट को 5% से अगर 3.75 पर डाल रहे हो तो इंटरेस्ट को कम आप एक बारी में कर सकते हो, बिकॉज देयर माइट बी अ प्रॉब्लम इन द इकोनॉमी और इन दैट कंट्री एंड पीपल माइट नीड सम लिक्विड मनी. बट एकदम से आप 3.75 से 5 पे नहीं बढ़ा सकते. अगर आप एकदम से बढ़ा दोगे, ऑल दैट लिक्विडिटी वुड बी सक्ड अप इन द मार्केट एंड एवरीथिंग वुड कम डाउन एंड अगेन पीपल वुड बी ऑन द स्ट्रीट्स. ओके, तो इंटरेस्ट रेट जब बढ़ता है तो धीरे धीरे बढ़ता है. ठीक है, सो बेसिक सेंस लॉन्ग टर्म बॉन्ड्स का भी इंटरेस्ट रेट धीरे धीरे बढ़ेगा, बिकॉज एट वन पॉइंट एकदम से एक ही दिन में यू कैन नॉट सक ऑल द लिक्विडिटी फ्रॉम द मार्केट. अगर इन्फ्लेशन भी बहुत ज्यादा है तब भी एक दिन में आप इंटरेस्ट रेट बहुत ज्यादा आप नहीं बढ़ा सकते. यू हैव टू like increase the interest rate in smaller proportions and in frequent intervals of time and real portfolio. and इसमें क्या हुआ, इसमें बोला गया कि 10% गोल्ड में डालो, रियल एस्टेट इन्वेस्टमेंट फंड्स में पुट इन 15%, कैश अपने पास रखो 10%, इंटरनेशनल यूएस बॉन्ड्स में put 15% to have an international exposure, because the Indian markets and the overseas markets have an inverse correlation with each other. US market जब बढ़ती है बहुत ज्यादा, the Indian market it tends to be stable or it goes down. Okay, US total stock market में तुम 15%, US small cap में 10%, international stocks में 15%, emerging market stocks like India or China or India, China, Pakistan and all these companies invest 10%. Okay, so this was again a different proportion which was made as per this pinwheel portfolio. Again, your proportion might differ. It is not mandatory कि तुम 10% ही गोल्ड में डालोगे, रियल एस्टेट फंड्स में तुम 15% डालोगे, यूएस स्टॉक मार्केट्स में तुम इन्वेस्ट करोगे ही करोगे. Like still a large number of people do not invest in US stock markets because they're like more comfortable with the familiar environment of the Indian market or their home country. Okay, so these things like you must know in the market. So these are basically some theoretical portfolios. You might remember these portfolios or not, it doesn't make a difference, but make sure that you are sure of your investing strategies or your portfolio. Okay, in case of clearing the interviews, if someone asks you these kinds of portfolios, you can name these portfolios. or you can give the answers on the basis of these portfolios to impress the person who is taking your interview. I know pinwheel portfolio, I know the golden butterfly, these red alios, this value investing was like made by different persons. So just to impress those persons, you can name these portfolios. Whereas, like more or less, you must have like more knowledge on creating your own portfolio. Okay, so that is what I would like to emphasize in this session. So that was all about value investing, and I would advise everyone to make their own strategies on value investing. Thank you so much.